Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Viking Therapeutics.
If you find our talks useful, please consider subscribing, liking, and commenting underneath. It really does help us out.
It does.
So we have a really fascinating case study on the table today. We're looking at a company that just reported, well, absolutely zero revenue.
Literally nothing.
And a net loss of over $350 million for the year. And yet
Wall Street is practically drooling over it.
Exactly. The stock jumped. Analysts are calling for, what, a 200% upside? And there are these rumors of a massive buyout swirling around.
It's the perfect storm of, high risk, high science, and potentially astronomical reward. We've got earnings reports from early 2025, clinical trial data, technical charts, a lot to dig into.
So the mission today is to figure this out. Is this company a ticking time bomb of cash burn? Or is it maybe the next giant in the weight loss revolution?
Let's dive in.
Okay, let's start with the elephant in the room. The financials. I was looking through their full year 2025 report, and it looks painful.
It definitely looks ugly if you're used to looking at, say, profitable blue chip company.
Right. So top line revenue, zero. Net loss for the year, $358.5 million. That's a massive jump from 2024, where they only lost about, what, $110 million?
A huge jump. And if you zoom in on just the fourth quarter of 2025, they lost $1.38 per share.
Which, by the way, was a miss. The analysts were expecting a loss of around 89 cents.
Yeah, so they burned through cash significantly faster than anyone really expected.
Usually when a company reports zero sales and burns way more cash than predicted, investors sprint for the exits. But Viking shares actually climbed over 8.5% after this news. Why?
Well, I don't think they're ignoring the math. I think they're just interpreting it differently. In biotech, you have to look at where the money is going. If they were spending that on, I don't know, fancy office furniture or marketing for a product that doesn't exist, that would be a disaster. But that's not what happened here.
So where did the cash go?
Research and development. R&D expenses just exploded to $153.5 million in just the fourth quarter alone.
Wow.
Compare that to the same quarter the year before, where they only spent $31 million. That is a massive, aggressive ramp up.
So they're pouring fuel into the engine.
Exactly. They are funding these huge clinical trials. They're manufacturing the drug for those trials. They're hiring talent. So when you see R&D spend spike like that, it's often a proxy for progress.
Okay.
The market sees that $153 million not as a loss, but as an investment in the very near future.
I get that. You have to spend money to make money, especially in pharma. But at this burn rate, surely they're going to run dry at some point.
And that's the worry with most small biotechs, right? The dreaded dilution. They run out of cash, have to issue new shares, and it just crushes current shareholders.
But Viking is different.
Viking is in a surprisingly unique position. I'd call it a fortress balance sheet for a company with no revenue.
How much do they have in the vault?
They ended the year with $587 million in net cash.
And debt.
Zero debt.
That is a lot of runway.
It is. Even with this crazy burn rate, that cash pile implies they can push through their major phase 3 trials without being desperate for money. They aren't backed into a corner.
Which give them leverage.
Total leverage. So the financial house is actually in order, which is kind of weird to say.
Okay, so let's pivot to what they're actually building with all that money.
Yeah.
Because the weight loss sector, the whole GLP-1 space, it's getting really crowded. You've got titans like Novo Nordisk and Eli Lilly. What makes Viking think they can compete?
This is where we get into their moat. Viking isn't just trying to make, a generic version of Ozempic. They are betting on a proprietary pipeline, and specifically their star asset, VK2735.
VK2735.
Right.
The crown jewel.
Right.
What makes it so different from the shots people are already taking?
It all comes down to the mechanism of action. So most people know about GLP-1. That's the hormone that signals to your brain, hey, I'm full.
Right.
But VK2735 is what's called a dual agonist.
Okay, let's unpack that. Dual agonist.
Think of a cell receptor like a lock. The current drugs, they turn one key, the GLP-1 key. Viking's drug turns two keys at the same time. GLP-1 and another one called GIP.
GIP?
Yeah, it's another hormone involved in metabolism.
So why is turning two keys better than one?
Well, the data suggests there's a synergy. When you target both, you don't just get better blood sugar control, you seem to get significantly more rapid weight loss. But, and this is the kicker, Targeting GIP also seems to mitigate some of the nausea.
Oh, that's huge.
Ah,
Because I've heard the side effects from the current drugs can be absolutely brutal for some people.
brutal, exactly. So if you can offer a drug that works better and makes you feel less sick,
Yeah,
you win. And they're proving this out in what they call the Vanquish trials.
great name.
It is. Vanquish H1 is for obesity, and they've already completed enrollment. The speed of that alone tells you something.
That doctors and patients want in.
They want in, and Vanquish H2 for diabetes is enrolling now, and they're hoping to finish early in 2026.
But there's another layer to this, right? Because everything we've just discussed, those are injections.
Correct.
And while people will take a shot to lose weight, nobody loves needles. I saw something in the notes about an oral program.
This is the potential holy grail. Viking is running trials for an oral version of VK2735, not a shot, a pill.
That changes the game entirely.
It really does. Imagine you start with injections to get the weight off fast, but then for the rest of your life, to maintain that weight, you just take a tablet with your morning coffee.
The maintenance market.
It's massive. And if Viking can crack the code on an effective oral pill that competes with the injections, they could become the market leader in that niche.
And just to be clear, they aren't a one-trick pony, are they? What happens if this weight loss drug fails?
They do have a backup. It's called VK2809, and it targets liver disease NASH. It's a serious condition with very few treatments. So yes, there is some diversification, but let's be honest, the current valuation of this company is probably 90% driven by that weight loss potential.
Fair enough. So let's talk about that valuation. Because looking at the stock chart, it's been, well, a bit of a roller coaster.
Roller coaster is putting it mildly.
Right now, the stock's trading roughly between, what, $29 and $34. And for the technical analysts listening, it looks a little weak on the surface. It's below both the 50-day and the 200-day moving averages.
And typically, when a stock is below its 200-day, that's a bearish signal. It just means the long-term trend has been down, the momentum has been negative.
So the chart looks bad.
On the surface, yes. But if you look closer, there are some signs of a potential reversal. Take a look at the RSI, the Relative Strength Index. It's sitting at around 38.
For those who don't trade, what does 38 mean?
The RSI is on a scale from 0 to 100. Anything below 30 is considered oversold.
Meaning the selling has just gone too far, too fast, and a bounce is likely.
Exactly. So at 38, we're getting very close to that zone. It suggests the sellers might be exhausted.
And we saw that bounce happen in real time after the earnings report, right? Bad news comes out, and the stock actually pops up.
A classic spring-loaded setup. The market had already priced in the worst-case scenario. When the news wasn't a total catastrophe and showed that R&D progress, the buyers stepped back in. It really feels like the stock is coiling.
Waiting for a catalyst.
Yep. Waiting for a catalyst to break out of this downtrend.
Well, if it does break out, where is it going? Because the analyst targets I'm seeing, honestly, they look like typos.
They are staggering. We're tracking 18 analysts who cover this stock. 17 of them rated a buy.
17 out of 18.
One says hold. 0 sells.
That is incredibly rare for a pre-revenue biotech.
It gets crazier. The average price target is $93.39.
Hold on. The stock is at $30.
Correct. That implies a 218% upside from where we are right now. Even the more conservative targets are in the $85 range.
So Wall Street thinks this company is trading at a 60 or 70% discount. Is that just the drug potential?
It's the drug potential combined with what I'd call the whale in the room.
The buyout rumors.
Yes. M&A. Mergers and acquisitions. You have to look at the landscape. Big pharma companies like Pfizer are desperate to get a piece of the obesity market.
But they're way behind.
Way behind. Viking has a clean balance sheet, a clinically proven drug mechanism, and a market cap of around $3.3 billion.
$3.3 billion is pocket change for Pfizer.
It's a snack-size acquisition. They could buy Viking, plug VK2735 into their massive global distribution network, and instantly compete.
And are we seeing any evidence of this? Or is it just wishful thinking?
We're seeing what we call whale activity. There's been unusual institutional flows into healthcare stocks recently, specifically mid-cap biotechs. And there's a lot of chatter that the big players are circling.
Because the price tag goes way up if the phase 3 data is good.
Of course. The window to buy them cheap is closing.
Okay, so that's the bull case. Fortress balance sheet, a dual-action drug, an oral option, a potential 200% return, or a buyout. It almost sounds too good to be true.
And that means it's time for the reality check.
The bear case.
Right.
What goes wrong here? Because I remember seeing a specific data point in their oral trial that made me a little nervous.
You're probably thinking of the discontinuation rate.
Yes. In the 2025 oral trial, something like 20% of patients stopped taking the drug.
That is the single biggest red flag,
Mm.
20%. And it was mostly due to GI issues, nausea, vomiting.
That's a lot.
Yeah.
1 in 5 people just couldn't handle the pill.
Precisely. And remember what we just said about the maintenance market. If you are taking a pill every day just to keep weight off, your tolerance for feeling sick is very, very low.
You might put up with it to lose 50 pounds, but not just to maintain.
Probably not. And if the FDA sees a 20% dropout rate, it complicates things. The efficacy was great. They hit over 12% weight loss. But if the tolerability is poor, it really limits the commercial potential.
Is there also a risk that the market just gets too crowded?
That's the commoditization fear. With everyone rushing into this space, you could see weight loss drugs become like, ibuprofen cheap, plentiful, and low margin.
A race to the bottom on price.
Right. Now, I'd argue Viking's dual agonist approach protects them from that a bit.
Right.
They're selling a superior mechanism, but it's a real risk.
So weighing all that, what should we be watching for in the next few months? We're past the earnings report. What's the next big catalyst?
The focus shifts entirely to the pipeline. We need to watch for the completion of enrollment in that Vanquin H2 diabetes trial. That should be early this year.
And the oral trial.
That's the big one. We need updates on the oral maintenance trial. Specifically, have they tweaked the dosing to fix that nausea problem? If they can come out and say, hey, we got the discontinuation rate down to 5%, the stock will fly.
So if you had to sum this all up into an investment thesis, what's the final verdict?
I'm giving this a bullish 8 out of 10.
Wow, an 8.
Look, the risks are real. That nausea issue is a hurdle. But the upside is asymmetric. You have a company with nearly $600 million in cash, a differentiated asset in the hottest market in decades, and a valuation that implies a massive discount.
So the strategy is?
For me, it's a multi-year hold. You're buying a ticket for the phase 3 data readout, or you're buying a lottery ticket for a buyout. Either way, the math suggests the reward is worth the risk if you have the stomach for the volatility.
And that really seems to be the theme here. You need the stomach for the stock's volatility, just like the patients need the stomach for the drug.
That is a painful but very accurate analogy.
It's just fascinating. You have a company that, on paper, looks like a disaster zero revenue, massive losses. But when you peel back the layers, you see a strategic war chest and a potential blockbuster.
It's a classic biotech story. The numbers lie until they don't.
I do want to leave our listeners with one thought. We talked about the buyout. What if a big player like Pfizer doesn't buy them? Does Viking have the infrastructure to actually launch this drug alone?
That is the billion-dollar question. Building a sales force to compete with Novo Nordisk is incredibly expensive, incredibly difficult. If they don't get bought, they might have to partner up. And that transition from a research company to a commercial one is where a lot of biotech stumble. It's definitely something to chew on.
A lot to consider. This has been a deep dive into Viking Therapeutics, a company sitting on a mountain of cash and a potential gold mine of a drug. Thanks for listening.
We'll see you in the next deep dive.